Hey, and welcome to Tax Tuesday with the Tax Queen. It is September. I can't believe it's September. I apologize for missing August, and I did capture quite a few questions. I had a little bit of technical difficulty and unknowingly missed some questions that were submitted for August. So here we are, September, and I've got quite a few questions to go. If this is your first time joining me, I always do questions that were sent in ahead of time. And then I will go into any live questions if we have time. I try to keep this to 15, 20 minutes so that it's easy to digest for those either live or for even after the fact. So let's just dive in. If you're here live, feel free to um, tell me where you're coming from or where you are right this minute. I always love to see where my clients and listeners are throughout the world. So let's dive in. So, first question, are charitable deductions to be capped at a certain amount for those who do not itemize? So, this is a question related to the latest tax bill that was passed on July 4th of this year. And this is related to the One Big Beautiful Bill Act, otherwise kind of abbreviated as OBA. And there are changes coming. So we call it above the line, so you don't have to itemize, right? So not necessary to itemize, and you get to take a charitable deduction if you contribute cash to charities. So just be aware of that. That is starting in 2026, so it is not available for the tax year of 2025, which is what year we're in currently, obviously, for the tax year. So that's $1,000 for a single, and then 2,000 if you're married filing jointly. Again, that's starting in 2026. You are allowed to take cash charitable contributions. So it doesn't count goods or donating clothing or furniture and things, especially for those who are selling their house and becoming nomadic. So I see a few people telling me where they're from. I love it. Colorado, Oregon, Florida. Very cool. So that's that first question, again, related to that new tax bill that was just passed in July. There are a lot of changes, so keep an eye out. I do have a bunch of changes coming out this fall. I'm going to send them out in the newsletter, so they're just kind of tidbits, easy to digest. So yeah, if you have a meeting with a prospective client while I'm staying at a campground, can I deduct the expenses, the campground fees for the day of the meeting? So absolutely not. If you're full-time RVing, that is your home. You don't deduct the expenses of the campground. And I'm actually not really sure, are you staying at the campground and meeting someone at the campground, or are you just saying I'm working from my RV and I have, I'm gonna pick up the phone or, use my computer or whatever to meet with that client. But either way, when we're traveling in our home, we don't get to deduct expenses for the cost of our house and our cost of our lifestyle. So be aware of that. Um, I'm trying to read. Sorry if I'm looking over to the side. I have my notes over here. So the only thing I wanted to kind of add to that is if you're parked at a campground and you're driving, let's say, to a restaurant or a coffee shop or to a client's office, you can take the mileage from the campground to that space to meet with that customer. Whether it's a potential client or a current client, it doesn't matter. Um, yeah, so business miles would count for driving to meet someone in an office or a restaurant, coffee shop, whatever. So hopefully that helps answer that question. I am intending to start a business January 25. If I do $10,000 in my first quarter and I can prove expenses were 10,500, do I file quarterly? Okay, so first thing is there's no filing quarterly. We pay estimated taxes quarterly. We pay taxes. We don't file taxes quarterly, depending on what we're earning in that year. So, or that quarter. Some people have seasonal businesses. Maybe summer is really busy. If you run, specific industries or Christmas time, the holiday season is really busy and picks up, so you have more income in those time periods, and so you might owe more tax. But your expenses might also pick up. Chances are, if your income, is going up, you have sometimes more expenses. So I'm just going to drop in the chat here, making estimated tax payments. So just to clarify there, we don't file quarterly. We only file annual tax returns. Quarterly is just tax payments. And to understand that, we have a pay-as-you-go tax system here in the US. And people who are W-2 employees, right, we're paying as you go because our employer is withholding that tax from our W-2 income, our salary, and paying that in. When we are self-employed, we're responsible for making those payments. So that's why we have that system of paying quarterly. There are other times when people have to pay in quarterly, when you have big capital gains or something, you sell an investment property, you sell a business, you sell stock sales, things like that, that would jump your income and might make you have to pay in a quarterly payment. But generally speaking, there's no filing. It's always paying quarterly. Next question. We're a tired couple living in Florida. We plan to start helping to lead RV caravans. We understand compensation is listed as 1099. So it sounds like, well, let me stop there. Okay, that's not the full question. But technically, from my perspective as a tax person and the legal tax laws, you are actually not be a 1099 employee, and I want to understand the difference. To me, someone who's leading a caravan should be a W-2 employee, and the reason why is because you're dictated time, place, like how you're doing your job, right? So you're told where to go at what time, on what days, right? There's not an option there. So to me, that should always be a W-2 employee, and that's the way the law is written. W-2 is dictated hours, how you do your job, like time, all of that stuff. So to me, leading a caravan, you're very dictated on time and how you do your job. They're probably even telling you exactly the route to take, the campgrounds, right? Everything. So I would not consider that a 1099 or contract work. Needless to say, many people are mistreating it. And the question is really going on, what can we take as travel expenses and for the RV and all of that? Any real advantages to establishing an LLC? So there's a couple of things here. The RV, well, if the RV is your full-time home, and I'm not quite sure if this person who asked this question is on, feel free to kind of go back and forth. That's fine. But if it's your full-time home, then you wouldn't really be able to take RV expenses because it's your house. So we don't deduct our house. It's our living. It's our place where we live. It's our lifestyle. If it's your second home and you're saying, okay, I'm going to go out for a couple of months and make a little bit of money on, leading some caravans, it's possible because you really are using it for business. So this person, I would really suggest doing a one-on-one consultation, so I can learn a little bit about and help them better. As far as an LLC, S Corp, I get this question frequently, and I think I feel like I'm always answering it and I'm always sharing. But LLC is a legal entity, and I I really stress that it's not a tax thing. So LLC is a state level legal entity. Okay. Tax entities are sole proprietor, so one person doing owning a business, working on it. Two people, three people, four people, more than, one is a partnership by default. And then you have your S corporation, which is a tax election, and your C corp. So those are the four ways that we get taxed by federal and typically state as well. So just keep that in mind. The LLC is not there for tax savings. Here, and I will share, I'm going to just keep sharing some posts if you want to do some further reading and stuff. Choosing a business entity and which one is best for you, and understanding kind of the difference of LLC, S Corp, partnership, all of that. So I don't know that I fully answered this question. Maybe I made it even foggier and more confusing. But generally speaking, if you live in an RV full-time, It is not a tax deduction for your business. It is your lifestyle choice. And that is really no difference than somebody living in their home, right? An apartment. That apartment, that house is not for tax purposes, right? That's your life. That's where you live. That's where you eat. That's where you sleep. That's where your family is. It's where you entertain your friends or your family, and it's not a business thing. So hopefully that kind of clears that up. I started a bookkeeping business this year of questions on how do you pay yourself? How do I use my business to help with my own expenses? Um, what things do I need to do to help prepare my taxes? Are there things that a bookkeeper can do to help make an accountant and tax prep people's lives easier? Um, let's see. So there's a bunch of questions here, and again, it depends on your legal entity or your taxable entity on how you pay yourself. But generally speaking, a single member person operating a business, pay yourself, you just move money from one account to another. So my first suggestion is always have separate business and personal bank accounts, credit cards, you name it. Everything is kept separate. So whenever we have business income, it comes into our business account. Whenever we have a business expense, it goes out of our business account or on a business credit card, one way or the other. But that way, everything is kept separate. There's no commingling. And if you need to pay yourself, right, which is really, we just move money from that business account to our personal account. And that's fine. That's really how you pay yourself. It doesn't need to be anything complicated. Super simple and easy when we are a sole proprietor or a single member LLC, right? That's just equal to a sole proprietor. As far as business expenses, it really depends on the industry. Obviously, this is bookkeeping. Anything kind of tech or online related, I find business expenses are small, right? So we have the cost of our computer, any software. Um, it may be insurance. It may be like you need Microsoft Word. I don't know that you would need that to do bookkeeping, but any kind of things like that. So really industry specific. What do you need to do that work on an everyday, week, month basis? That can include internet and phone, especially for those who are working remotely, right? We might use our internet, 70% of the time for business versus personal. And you can be the best judge of that and how much time you're spending online, and then kind of split. So let's say, for example, you get Starlink so that you can work from anywhere and you stay connected. And you can say, okay, well, 50% of that bill is going to be for business, and that's fine. That's fair. So there can be some split expenses there. That's fine, especially as a sole proprietor. Um, Making things easier. I mean, for me, just being a bookkeeper in general or having books as a business owner is being organized, is making sure every income or all your expenses are showing on the books. You're keeping up with it. I think that's the biggest thing. Keeping monthly. I really say monthly. Sometimes I say weekly. Work on your books weekly because it's actually easier to digest. So spending 5, 10 minutes, maybe up to 20 minutes if you have a complicated, more things going on in the business. It also keeps you updated on what's happening if somebody owes you money. Just kind of cash flow, what's happening. So I like to say weekly, work on your books, even if it's 5 or 10 minutes. It's easy to digest. If not weekly, then definitely monthly. So you're reconciling those books against your bank statement or credit card statement, making sure everything is there. Um, Reports are clean, so profit and loss is clean. If you're running an S corp, or even a partnership and you have a balance sheet, so that balance sheet is clean. So tax time, it's easier, it's really easy, right? So we just run reports from that software and it makes it a little bit easier to hand off. Um, but yeah, so hopefully that answered that question. And I'm going to move on to the next one. I'm a full-time employee of an organization. I'm about to start a side gig, contract position, so you're going to own a business. And do I need to officially start a business or is it fine to have it connected to my personal taxes? So this is kind of the same kind of question. It's absolutely fine. You do not need a legal entity to start a business. You can be a sole proprietor using your social security number. It's fine. No big deal. Uh, I personally like to get rid of my social security number and not hand that out to anyone because if you're doing contract work, they're going to ask you for a form, which is a W-9, and that could have your social security number. So I like to make sure that I get an EIN or an employee identification number. So that kind of hopefully a little bit keeps that social security number private and a little more protected. But otherwise, no, you do not need to actually officially start a business legally, like forming it with a state or anything like that. Just be aware, depending on the industry, if you need licensing, depending on your state or your county or city, if you need licensing there, if you're, you still have ties somewhere. So, yeah. And again, it's just kind of learning what are legal entities and taxable entities, but you don't need one to have a business, especially as a side gig. I don't, yeah, I don't see it necessary. Okay, working as a contract worker with Florida residency, we've worked in several different states, and we are now looking at going to British Columbia into Canada and expect to continue working there at least part of the year. Uh, just getting a short-term work visa in Canada is hard, I'm sure it is. But applying for permanent residency negates that need. So we're planning on going the resident path. What costs can we call business expenses for working outside the US? Certainly everything associated with getting licensed counts, but what about residency? So generally, no. So this is kind of the same thing. If you're applying for residency, that's your choice. Um, and that would not be a business expense. Licensing, sure. So if you had to get licensed in Canada, or whatever, if they have kind of reciprocity, I can't even say this word. If they recognize, your license from the US into Canada, or any kind of payment you would need to make that happen, sure. But a residency, I would not consider a business expense. Especially, yeah, for a spouse or child, it would not be business related. Um, and basically, I mean, you're asking like about moving costs. Moving costs are never a business expense. So, and they're not even deductible on our tax returns. So, moving is a personal choice most of the time. If somebody moves for work purposes, like a W-2 employee, a lot of times, you'll get, not all the time, but sometimes they'll give you like a lump sum to help you move, but it's not a business expense. Uh, And do you know of anyone who deals with international? So I do work with people that are living outside the US. I do not do, if you're like Canada, I won't do Canada tax return, but I will always complete a US tax return. So that goes for RVers, digital nomads living outside. So that's Canada, France, or Singapore, Australia. It doesn't matter where you're living. I can help with your US side of taxes. Okay, I've got a few more. I know this is going a little longer than typical, but I hope you guys are hanging in there. We relocated to Florida October 24. Did not close on our house until September of 25. We purchased a home in Colorado 20 years ago. And would there be any capital gains or do we owe tax on it? So this is actually really cool. The US right now allows, if you've lived in your home for 2 of the past 5 years, so full time, that's your residence, that's your, domicile, whatever, using your home, and 2 of the last 5 years, you are qualified to get $250,000 tax-free gain from that house per person. So if you're married, that goes to 500,000. So if you bought your house for 100,000 and you sold it 20 years later for 600, you had 500,000 of gain, which it wouldn't be that much, but we're keeping this simple. There would be no capital gains on that home. But keep in mind when you have a house, for this example, like 20 years, you've probably done some updates, right? You might have had to put on a new roof. You might have had to replace the HVAC. You might have done some painting or new floors, a new kitchen, bathroom remodel. All of those count towards your basis or your cost in the home. So if you bought it 20 years ago for 350,000 and maybe over the course of those 20 years you've put 50,000 into it or even more, 75,000, right? So now we're jumping that up. So I hope that kind of clarifies that. In this case, there would be no capital gains because of that. So again, 500,000. You also get to take off closing expenses, which is all of those, the broker fees, anything to do with closing on the home. And that could even be cost of staging it, or hiring a lawyer or whatever is needed to get that done. So all of those count as expenses. Thankfully, that provision is there and it really helps us when we sell our personal residence. Um, yeah. All right. I currently have a rental that I file on a Schedule E. I'm if I create a trust and move the property into the trust, I assume a separate return must be filed for the trust. Uh, I guess I'm missing something here. So maybe moving the rental property into a trust. I'm not 100% sure of what this question is asking. Um, Trusts, there are many different kinds of trusts. Some trusts have their own tax return, and some trusts are there for legal purposes, and estate planning purposes. So it really depends on the kind of trust you have. So that's why I can't really answer this question. I don't work a ton with trust tax returns, if it is required to have a separate tax return. So I don't know, for legal purposes or for passing on, succession planning or whatever for children. Um, Trusts are great, but as far as tax purposes, I don't see the huge benefit. But yeah, it depends on the trust. So sorry, can't answer that one too well. We are looking at renting our house in Colorado, mid to long-term rentals. It would be furnished and include utilities. And okay, should we start an LLC? So there's a theme here, I think, for like there's homes and rentals and then that whole LLC. And I've kind of already covered this. Again, LLC is a legal entity, not a tax one. So I honestly don't care. If you create a rental and have an LLC, if it's just you or a married couple, I don't care. I kind of ignore it for tax purposes. It's really important. So not really any benefit. So. How can I write off a rent, a mortgage, and utilities as a percentage for I know I can write off for sticks and bricks office, right? What do I do for the RV? This is a great question. And most of the time I like to say, you don't take a home office deduction when you live in an RV. The home office deduction has to be 100% for business use. So think about that. Right? You live in a tiny house, 200, 300, maybe 400 square feet if you've got a 40-foot long RV. What space in there is dedicated 100% to an office? So it's very rare that I would recommend taking a home office deduction. The exceptions is a bunkhouse where there's that second room. The bunkhouse would be converted into an office space. That would be the exception. The same thing with a toy hauler if you use the garage for an office space. But think about it as how tiny it is in relation to the grand scheme of the house, right? So if it's, I don't know, 10 feet or something, 20 feet. So you're really not going to save a ton. It's not really that helpful. And to me, it's kind of a red flag. So I generally say, don't take a home office deduction. Um, yeah, that's my short answer. Don't take it. You can't. Sometimes I like to say that choosing the RV lifestyle, it's a choice and we get this freedom to travel, and to live life the way we want to. And we get to be in cool places. So even if we work all day, we can go out and explore in the evening, or we could switch our work schedule. So take that as the benefit and don't look at the taxes as the downside, right? Or you're losing that home office deduction, but you're gaining that freedom and the ability to even choose this lifestyle. I think that's a pretty awesome. So I like to look at it the positive side of things instead of the negative. All right. Last question that I received in advance for today. I'm thinking about buying a new to me boat to live on. Very cool. And completing the Great Loop for at least a year. Are there tax advantages? Take advantage of for the purchase and use? Is that considered second home? Well, this is kind of the same as an RV, right? When we think about it, We buy an RV to live in and that's our home. There's no tax advantage to it. If you took out a loan, I suppose, it would count as a first home or second home as long as it has that bathroom, kitchen, and sleeping quarters. That's what defines a dwelling or a home, those three things. So I suppose it could be a second home, but I don't know how much that's going to help you. Standard deduction is really high. So unless you have a really high loan, it's not super helpful. So sorry, but that sounds awesome. Taking out a boat and traveling the world by ocean is kind of a unique, yeah, lifestyle, and I fully support that. But I don't know that there's a ton of tax advantages, so can't really, yeah. Yeah, so those are the questions that I got in advance. I had quite a few questions this time around, again, because I had some tech failure, and I appreciate your patience there. If anyone is here live, I can stay on a couple more minutes if you hadn't to ask any questions or clarifying answers, if you happen to be one of the persons who uh, yeah, had one of like the questions answered today. Otherwise, I am gonna keep this as short as possible because it is easier to digest smaller bits of information, I know. So yeah, unless I see a question come through, I really appreciate you being here. I hope you have a great September. And I will see you October. So October 7th is the next planned one. And then you can submit your questions in advance. I'm going to just leave that link here so that Tax Tuesday questions. I always go through the advanced questions first. And then if we have time, I will, yeah. Were there any significant changes with the One Big Beautiful Bill Act, tax and self-employed that we should be aware of? So there are a lot of changes um, coming forth, not a ton for 2025, but I would just keep an eye out for, I send out a monthly newsletter. I'm actually planning on doing that twice a month to keep up with some of those changes and to share some of them with my followers. And so, yeah, so keep an eye out for that. There are some changes coming forward and we need to be aware of. So, yeah, you're welcome. And thank you guys for being here. And I will hopefully see you in October. Have a great September.